Hey everyone, Doug Smaldino. Happy Thursday. Hey, what a beautiful day. It's a great day for real estate today, isn't it? Hey, guys, I appreciate all the emails lately about requesting talking points to give to your buyers that are so-called fence sitters. It's time you hear from a true professional of what's really going on out there, and not some, you know, pseudo expert that really doesn't understand the big picture. Now, let's talk about real quick the fence sitters. To help the fence sitters, we must understand the fence sitters. Now, here's what I'm seeing out there. Number one, there are people that want to buy, but they're waiting. Because why are they waiting? Because they're frozen. They got the stock market has been cratered a little bit, and their retirement accounts, which is probably the bulk of their assets or their savings is in their 401ks, that's been hit pretty hard. Number two, real estate prices have shown absolutely no sign whatsoever of coming down. There might be less offers on good properties and maybe a little low right now, but I'm not seeing big price reductions. I know these guys say that's the end of the real estate market. Same guys that talked about during COVID, it's over, it's done, just become a pumpkin and that's it. Well, that's not the case, as we know. Okay, it's a very powerful real estate market. It's been an unstoppable locomotive. It just doesn't stop on a dime. Okay, look, the other thing with the fence there is you got real estate prices high. Now mortgage rates are high. Then you got inflation. So you got a triple whammy: higher real estate prices, higher mortgage rates, and inflation. Okay, so they're just getting it slaughtered right now. So waiting is synonymous of sticking their head in the sand like an ostrich. Okay, now let's dissect these things. Right now, it's been tough. I think we've kind of seen the height of mortgage rates. I think we're there. Mortgage rates are starting to stabilize. I think the market's coming back a little bit. You can see on my screen, yesterday up 38 basis points, rates were down. But the bigger indicator is what's the stock market doing. This is the financial machine that drives everything, okay? Now, Dow Jones is only 16% off its high, 52-week high. It was up 82 points yesterday. It's starting to stabilize. Not quite there yet, but getting there. It's an uptrend, but it's under pressure. Okay, we're not there yet. If you can see on my chart here, this red line represents the 50-day moving average. Once the price of the Dow gets above the 50-day moving average, and maybe above the 200-day moving average, that's where it all changes. Now we're getting pretty close to that 50-day moving average. This is a great chart to look at. But the point is this: if we're going to hit another bull market in the stock market sometime between August and the end of the year, I think it's going to rage. I think the stock market's going to, like whatever happens in November with the elections, I think it's going to go. Okay, so people's 401ks are going to be back to normal. That's going to build a lot of confidence. I lost my 25%. I was down. Now it's back. Now I'm feeling good. Okay, real estate prices don't change. Mortgage rates, maybe I'll do an interest-only loan. Dougie says they're gonna drop, so we'll refinance. Okay, so the point is this: the stock market is a big piece of this equation. I don't ever hear any expert talk about stock market. Okay, I'm the expert. I know this is what happens. This market today is so like 2018. This is just like a crystal ball. Okay, we're looking at this. We're gonna see a higher stock market, higher real estate, and lower mortgage rates, and higher consumer confidence as the stock market begins to go up. Okay, now the market is a little bit miffed by the whole thing. Like, here's a typical thing here about the Federal Reserve, inflation, stock market mixed on Powell comments. Of course, the Fed has lost credibility with the markets because they're supposed to raise rates before. They didn't. Inflation, they're making this big thing out of it. They kind of have to, but I think it's really, when you really peel the onion back, it's really more about energy, and it's about the supply chain issues, okay? It's so obvious, okay? Look, you take out energy, like car prices, they're high because you don't have enough chips, and so there's no inventory, which means there's less supply, which means the demand doesn't change, and people just pay a gazillion dollars for cars. Okay. Bottom line is this: you got to dissect these things for your buyers. Tell them about the stock market. Tell them that it's going to be okay with if this does happen, they should see a big surge. They should be getting their files in game pre-approved now so that they can be ready, later in the year. Okay, if they just want to wait and see that happens, that's fine. But they're also going to miss the increase in value. Look, real estate prices probably be up I'd say another 5 to 10% between now and the end of the year. We got a whole half the year to go. Okay, we're early still. We're not even halfway done with the year yet. So they're going to miss out if they wait. If they get in there now, I mean, the stock market doesn't care if they buy a house or not, right? The stock portfolio is going to go up. Bottom line is it's a great time for them to get in. And if they have questions and you guys aren't sure, have them call me. Be happy to explain it to them. Guys, call us. We're closing loans extremely fast on conventional jumbo. And we got amazing bank statement programs. We got all kinds of wonderful products right now. Just signed a deal with a small bank in Florida to get the lowest 7- and 10-year fixed rates out there because they're so popular right now. Better than Union Bank. Amazing. So anyway, have questions, give me a call. Have a great day, everyone. Cheers.